a trade recap of March 5th, trading ES futures using order flow and volume profile. Again, like always, every day, we use the volume profile tool on previous New York sessions from 8 a.m. to 4 p.m. on the 30-minute time frame. So we did it here, here, and here, and this is current price today. After that, we look for all potential levels. So yesterday, we already marked out the seller absorption. 3 days ago, we already marked out this gap. Yesterday, we also marked out this target and this also target their signal to sell. Today, we marked out the second target, this POC line from this session, and this volume gap from the prior session also. How do I know that there are some potential levels? Well, because we can see here that there was a big gap of volume and price was rejecting this volume. Once it got to this level, disrespected, but we came back to the seller absorption and it's almost like the whole thing reset it. So price came all the way back down to this volume gap and it did as it should. It rejected it. And you can see here it touched the seller absorption again and then went back down to the volume gap. So now we know that this is a strong key level, as well as this POC target, because this is most likely the target of the day. Now, step 3, we look for entries. Looking for entries is the same process. We just scale down to the 5-minute time frame, and we use the same process, volume profile tool from 8 a.m. to current price. This is from 8 a.m. to 9:20. This is the 5-minute. After that, we identify the levels and how prices react to them. Today, we didn't need to use this because, I didn't use it because price, of course, on market open, you shouldn't really trade a market open. Sometimes you should if it looks too good. But on days like these, market open is not the way. We missed this target, so now we know that this wasn't the key level to hit today. So now we jump to these two targets, well, 3 actually. And target number 2, 3, and target number 4, which is our signal to buy. So as we expected, price came all the way down, touched the POC target. It had a little retracement, but we broke the level and fell into the volume gap again. We know this is a strong key level again, how we explained before, and price rejected this level again as expected, and then it came back down and price rejected it again. And then on the 15-minute time frame, if you see the candle, we see that price really disrespected this gap, so it's no longer a key level unless we go back to the buying zone. But yes, this is what happened today. Some entries that I would have taken definitely was this not POC target, because after I saw this candle, I didn't see any potential to it, but we know that it was a target. But as soon as we got to this gap, this is a trade that I would have taken. I was getting a haircut at that time, so 20 points we would have gotten this, and also we would have gotten this. I would have entered here again for another 20 points. And this is how it would have looked like on TradingView, something simpler to see. We see price, we got our POC target, we got our volume gap, and our 2 entries. So price came all the way down. We see that literally we touched the target, we tapped the target, it retraced. But we opened here. This is a trade that, maybe without discretion, people would have fallen for, but on the 15-minute time frame, you can see that price was disrespecting this area. So we jumped down to this volume gap, and as soon as price hit this is an entry that I would have taken right here. We almost got stopped out, but price went up, and then we came back down to this level. We aligned the last tick with our entry. We touched it, and price went back up. So there you go, guys. This is how I view the markets using order flow and the volume profile tool. This is how I identify the levels, as you can see. And hope you guys understand and keep following these videos. Thank you, guys.